Good morning, traders. Today is it's Tuesday, May the 30th, 2023, after a Memorial Day weekend. Let's get into our past week's performance and this week's market analyses. Couple of things just to start us off here this morning. Again, coming to you from Mexico, so apologize for the waves crashing in the background and the birds chirping, but we will be back in the office tomorrow. Shortened holiday week that we're trading with this week, starting today after Memorial Day holiday, and it has been an interesting weekend as we work towards getting a debt ceiling resolution and looking at what the AI stocks are doing to the overall market. We're going to take a little bit more in-depth look here in just a second at how that has affected the marketplace, this sort of AI push, and where that is affecting the market and how that is working. So let's jump right into it. So it's probably no surprise that we look at our technical indicators over a 1 week period, and it is just green across the board. It is just green, green, green. Obviously, some of our stochastics and RSIs are getting into the overbought range, as you would imagine in any case with the market pushing as much as it has in the last few days. But yeah, green across the board right now on a weekly basis and a daily basis. We pull a little bit closer in here and we can take a look at some of the things that I think are interesting to take a look at. Now, this is the E-minis, and this is what we use almost exclusively to do our technical analyses with. But of course, as you know, it's been the NASDAQ that has been really leading the way and pushing here. There's a couple of things I think that we can take a look at here. We were at about 42.38. We're at about 42.38 when I put this together here this morning, and I think a couple of numbers are key here. Number one, we're up above 41.39. 41.39 here is our point of control. We're well up above that right now. We are, I think, looking to try to test this level right in here. This is our August 15th high. That's about 43.29. So it's roughly 90 or so points above where we are right now. And I think that's where the market's trying to get to. I think that's where it's trying to test its next level at. Whoops. VWAP, very, very low from where we're at right now. VWAP is all the way down at 39.55. I think that's a substantive level. I think that if we were to look to any retracement or weakness, that VWAP would be a very critical level, that 39.55 level. And I would watch that level. But of course, right now, again, it's all bullish. We're looking to get back to that February 1st level of resistance eventually, but this key level right in here, this August level, that's the real key level. But again, February, right now we're looking at right in this area, this February 1st area. This is the sort of resistance level that we're pushing up against right now. If we look at the 2-hour chart, and you can see a little bit more definition here with our Fibonacci's, but of course the challenge that we have right now is that we're up at a high that we haven't seen in quite a while here, and so we don't have a lot of data up above here. But I would give you some numbers here, and again, I apologize being in Mexico. I didn't bring my drawing pen with me for my screen. But to the upside here for today, there's a couple of key levels that I'm looking at. 42.82 would be a big level up here, and then 43.29 is the big level. That's the August 15th high. That's what the market looks like it's trying to push to, and again, about 90 points or so higher than where we are right now, but 43.29. I think that's ultimately the number that we want to look to on the upside. Now, on the downside, we've got a lot more levels that we can take a look at here. 42.13 would be my first level down, and then 41.93 would be my next level. 41.86, tiny level just down below that one. 41.61, and then 41.42. 41.42 right in here. This level would be a big level for me. I've got that one asterisked. That could potentially change the tide back to a little bit more of the neutral or bearish stance. But again, right now, everything looks very bullish to the upside. We continue on and we look at our SPYs, our Qs, our IWMs, and our DIAs. I think it's interesting. The SPY closed at 420.02 cents on Friday. That's up at the resistance level of last week's high. So again, on the SPY, we're pushing up here against this past week's resistance level. The next level up again would be that August high. So relative to the SPY, that would be over 9 points of potential upside. The Qs, of course, are what are driving this big push here. We finished the last week at 348.40. We filled the gap from our previous level, from the April level. RSI is extremely overbought on the Qs. Of course, that doesn't mean it can't get more overbought. But it's looking to push from where we're at right now at this close from Friday of 348.40 up to what would be considered the fair value range, which is 353.07. 353.07 might be the upside there. You look at the IWMs though, and the diamonds just not participating. It really is the Qs. Yeah, SPY's up 10% on the year. That's a solid start to the year, but it's nothing extraordinary. It's nothing out of the ordinary. IWM and the diamonds are flat on the year. It is the NASDAQ that is pushing all of these things higher. And again, I think that there's some numbers underneath the surface that bear noting. Number one, this is not what you should see in a bull market. Where we have very few stocks above their 50 and 200-day moving averages relative to where the indices are. This is not a healthy bull market right here as we look at the internals on the marketplace. Now, I've added a couple things here to our analyses this week that I think can be helpful, and that's the equal weighted indices. This is the S&P equal weighted. As you know, most of our indices that we look at and track and trade are cap weighted, meaning that the biggest companies in there get a bigger percentage of the allocation. And if we were to equal weight those, you can see that honestly, we've gone nowhere. We've absolutely gone nowhere this entire year. Here's January of this year. Here's where we are right now. We've gone nowhere, absolutely nowhere in the S&P. Now, if we look at the equal weighted cap or equal cap weighting on the NASDAQ, we are pushing higher. Even on an equal weighted basis, we are pushing up at these highs. You can see here again, we're right back to this February high, and we're looking to get back to this August high. So this is a critical level here for the NASDAQ. It's obviously pushed a tremendous amount over this past month. So we'll see if that can continue or not. We look at the normalized market performance year to date, and you can see again that in just a different format here, a line chart. The IWM, the DIA is going nowhere this year. The SPY up 10%. That's a solid return so far on the year, but again, nothing extraordinary. It is the Qs that are absolutely just exploding to the upside. Just been an absolutely ripper of a year for the technology. And it's probably not any surprise if you look at the sector rotation from last week, where the activity was. It is pretty substantive to see how big technology has been in terms of pushing this market. Everything else really has not been that impressive. We'll take a look at a heat map here in a second, and you will see that this market really is not going up, save for a few of the big tech names that are pushing us higher and higher and higher. There's the heat map, and I don't think that any of us would think that this was the activity that we got this past week in the marketplace. There's a whole lot more red than green, but of course the green was in the very big cap weighted names, Microsoft, Apple, Google, Meta, Amazon, Tesla, and of course NVIDIA. And the big names not only were the ones in the green, but they were in the green by a substantive amount, by quite a bit. So we'll see if that continues going forward here. But again, if you look at the past week, this is 2 weeks ago. Obviously a strong week across the board 2 weeks ago. This past week, really, it was a whole lot of nothing, save again for the NASDAQ. The NASDAQ continuing to just push and push and push. Futures are up right now on the NASDAQ as I look at it, up a couple hundred points. So continuing that push to the upside. We look at our open interest gamma spots, and we have seen some changes here. So we've seen a lot more call activity than we have put activity. That's a big shift from where we've been over the last several months, which was primarily focused on put activity. And a couple of the areas that I think are important, the 4205 level right in here, obviously that's where we're at right now. On the S&P is 4205, and so you've got a pretty big gamma wall getting built right here at 4205. We've got down at 4100. That, of course, that level at 4100 continues to be a substantive level, but getting a lot more call activity now than put activity. 4250 up at 4250. We're also getting a lot of activity as well, and then that big huge gamma wall down just below 4,000 is I think a big protective wall of puts. But again, I think that this just denotes that we're at a very critical level here today, 4205. Last week's expected move was about 63 points. This week is better, but again, I don't think that it's going to be anything accurate in terms of what we're looking at for an actual move, which means simply that options are underpriced. Now, this is a 79-point move expected for a 4-day week. This takes into account the Monday holiday, so it would be, again, a little bit higher than what it would normally look like, but still, that's implying that we get a 79-point move in the S&P this week over this 4-day period of time. I think there's probably a pretty good chance we might get a bigger move than that. And so again, what that means is that the options that we're working with are largely undervalued. We look at the expected move in the S&P, and you can see that, again, what I would imply from this, or what I would take from this, is an undervalued situation. 1.3 expected % move for the 4-day holiday shortened week with about 13% IV. That's pretty darn low. That's pretty darn low. So we'll have to see. I always like to write these numbers down: 425.68 on the top side and 414.36 on the downside for the S&P, or excuse me, for the SPY. For the SPY, and see if we do in fact fit within that range. It's a pretty tight range based on the volatility that we're getting. We'll look at the fear and greed sentiment reading. It's a contrarian indicator. We're still up in the greed area. That hasn't changed for over a month now. Again, just because we may potentially be overvalued here doesn't mean we can't get more overvalued, but it certainly does look like we're leaning towards more getting ready to pull back and at least, if nothing else, move to a neutral stance. But we've been green and in the greed category for, again, over a month now. So that's been a long time for no movement there. Monday we had a holiday in terms of potential news catalysts. Today, Tuesday, we have Fed Barkin speaking. That usually, when Fed Barkin speaks, it doesn't usually move the market too much, but you never know. A bunch of Fed speak coming out on Wednesday with the Jolt jobs openings coming out. Thursday, we've got crude oil numbers, we've got jobless claims, and we got a little bit more Fed speak. And then we do have non-farm payrolls on Friday, and that can probably be something that might move markets if it was substantive enough. It certainly has in the past. So not a whole lot on the agenda for this week, news-wise. Zero DTE results. We've had 109 days of trading opportunities. We've taken 184 total trades. 179 have been winners, 4 have been losers. We've got one that is in a rolled state right now, and it's on the NDX, and it's a call side. We're pretty buried in that one. And so I don't think that we're going, unless we have a really, really big correction in the next couple of days, I don't think that one's going to fall into the winner category. It's probably going to be a loser. But nevertheless, we've been pretty darn successful, excuse me, with our zero DTs. Also, with the number of zero DTs that we've been able to take advantage of. We've been able to get a lot of NDX trades along with our standard SPX trades. Excuse me. We had a fabulous week last week with our 4 DTE trades. Absolutely fabulous. About a 12.5% return on our SPY trade, and a little bit below average return on our Q trade, but we pulled it off very early in the week, and excuse me, we only got one side of the trading. We only got the call side in. So it was a very, very successful week last week for our 4 DTEs. In addition to our 4 DTEs, our IWM Millionaire Maker, just solid as all get out. Better than our 1% targeted rate of return. We try to bring in about 1% a week on that trade. It's rock solid, rock solid. We added one pairs trade, and so now we've got 3 that are open and working, and we'll continue to work those here going forward. But so far so good on those. Didn't add any bear market trades. Our stock market millionaire maker trade, we had a bunch of activity there. We have been having to chase both of those trades. We've been having to chase our PayPal trade to the downside and our Netflix trade to the upside. So far so good on that, but we're back here again once again this week, Monday morning. And we'll probably be working the Netflix trade once again. PayPal trade looks actually pretty darn solid right now, but the Netflix trade continues to push higher, so we'll chase after that again this week. But so far, so good on those trades. Our positive Vega DIA ladders, those have probably been, well, I was going to say they've been the least maintenance-wise trades that we've done. The IWM Millionaire Maker is right in there as well, the pairs trades as well. But boy, they've been solid for us this year. And again, I think it really speaks to the importance of having a diversified approach to what you're doing. You just never know. People say, man, you do a lot of different strategies, a lot of different setups, a lot of different trades. You just never know which area of the marketplace is going to be easy for you and which one's going to give you challenges. So we do try to be very, very diversified in our setup. But the DIAs for us this year, that was the trade that we had to chase and work quite a bit last year. And this year it's been easy peasy. It's been an easy trade for us. It's been really, really solid. Bringing in about 10% a month, month after month after month. It's just been really, really good for us. And we haven't had to adjust it, I don't think, a single solitary time this year. Working again this week on getting the portfolio margin monthly income plan put in place. That's going to be about a $300,000 portfolio on portfolio margin. So for those of you that are working with higher balances, can take advantage of portfolio margin. We're looking to bring in somewhere around $16,000+ a month in income on that $300,000 account. That's the goal, at least. And so we'll get you some more information on that as we get that set up. That money should be in our model portfolio here this week. So we'll get going on that here shortly. Excited to roll that out for you guys. Scalping this past week, a whopping $52 of profit on Tuesday. for me. And then Thursday I was traveling here down to Mexico, so no scalping for me on Thursday. Dragonfly, we have not gotten back into that, but we have that on the agenda for this week. We will be establishing a brand new Dragonfly trade. Those have been high earners for us, 9 to 12% returns on those trades. So those have been really, really solid trades for us, usually over a 2 to a 4 week period of time. Theta Fairy, we've had 96 total trades, 95 winners. It's a solid trade, guys. It's that's 96, about 9,500, what, 9,500 bucks or so in our pocket this year, just off of a trade that we put on and as we go to bed, and it works for us as we sleep at night. Gold ladder. We worked all of the gold ladders. We reworked all of the gold ladders last week. So we've, again, widened the profit zone and brought in an enhanced credit on those trades. So we've increased the profit potential. Widened the profit zone, increased the profit potential on that. Looks pretty good right now. Gold looks like it's pushing a little bit to the upside here today. That would benefit our setup right now. We've got a lot of extrinsic value in our trade this week, so hopefully we can take that to expiration this week. Overnight vampire trades, we did have another one recently, had a successful result in that, made the money through the hedging part of the trade, but 5 of those total this year, 4 have been winners, 1 was a loser. Oil ladder had a very successful week once again last week with our oil ladder. We are going to add another oil ladder to our setup today. Get back on top of that. We only have 1 ladder working right now. We usually have 3, but that has been really, really strong for us the last couple of weeks. Of all of our ladder trades, again, the oil ladder gives us the highest potential return. In the money cover trades, we're up to 44 on those. Those keep working for us. Those keep cash flowing every single solitary week. Very solid trade there. No new broken wing butterflies. The short portfolio we've basically closed out now at about a 32% return over about a 3.5 month period of time, something like that. That was a nice little trade. No new flies, and trading binaryideas.com event contracts. We've done 5 of these now, and we've been able to close 2 of them out as a winner. We got 3 of them still working. These are fun trades, and you can trade it with like $2 if you want. Very, very fun trading ideas here, and trades that I think can give you some pretty good leverage in terms of creating an edge. Like them a lot. Glad that we were able to add those to the portfolio mix. Our investing program, the ATM program, we took a little hit, or we didn't really take a hit, but we took a scare a few weeks back with the regional banking issues. Those recovered quite nicely and actually ended up being very profitable for us to date. And now we're chasing the technologies, and so we've gotten knocked down a little bit on our year-to-date rate of return. We're down to about 5% on the ATM versus about 10% on the S&P, but we've got a lot of profit potential built into that if we can get a few of our trades to maturity date. So we'll continue to work that. I still continue to like that in terms of our potential ability to be able to succeed on both of our focuses, which is A, beat the market return as measured by the S&P 500, and B, do it at lower volatility, lower risk. So that's where we're at on the ATM. Again, we'll get an updated chart for you here as we finish out the month of May. If you'd like to come trade with us, we'd love to have you. You can go to tryzerodteforfree.com, get a free week access to our live trading room. If you're interested in that, we've got a lot of training, 4 hours of training that we put you through. I work with you one-on-one in a Zoom consultation. If you follow the training and the steps that we outline for you, we give you a 200% money-back guarantee. We're the only ones, I think, that do that. I think that you'll absolutely find it to be the most amazing trading room out there. I really do believe that. If you're more interested in investing rather than trading, passive approach, you can go to our ATM program, our asymmetric trade management program. You can go to tryatmforfree.com. Come hang out with us for 2 weeks there. See how we do our asset allocation. Love to have you check that out. If you want to scalp with us on Tuesdays and Thursdays, you can go to tryscalpingnow.com. And we try to bring in about $500 to $1,000 a day each day. We trade usually the E-minis, trying to get about 10 to 20 points out of it. They're worth 50 points a piece. So that's where your $500 to $1,000 potential comes from. Other than that, thank you guys. Appreciate you. It's been nice to be here in Mexico for a few days, get recharged a little bit. We'll be back in the office tomorrow. Hope you guys have a great trading week.